How does Bancor view the potential impact of a U.S. market structure bill like the Clarity Act on on-chain execution and secondary markets, particularly for deterministic trading systems?
I don't think either of the policy changes being proposed by the Trump government really have much impact on Bancor or anyone else in DeFi. The Genius Act, which put forth the rules for stablecoins and what would be considered, for example, acceptable collateralization for their issuance and other things. I think that has actually been beneficial because things like Tether now can't use things like corporate debt to collateralize the USDT token, and Circle is held to the same standard. Those things are generally good because I think DeFi is going to be on slightly stronger footing given the thoroughly entrenched nature of stablecoins across that ecosystem. It doesn't really affect DeFi protocols necessarily. It's very specific to stablecoin issuers. The Clarity Act really is about whether or not a specific token will be categorized as a commodity or a security. And this is really only important because of the way that the US regulates exchanges. Under US law, an exchange that deals in commodities is not allowed to deal in securities and vice versa. These things have to be kept separate. And so the question was, are things like ETH securities or are they commodities? Are things like Bitcoin, like XRP? This was the huge legal battle Ripple was going through, whether or not XRP, the token, is a security or a commodity. The Clarity Act is meant to specifically resolve that single issue. But the Clarity Act also provides DeFi protocols a kind of safe harbor. There is a specific exemption for non-custodial protocols. Basically, all DeFi products fall into that category. Not every single one of them, but 99% of DeFi protocols are non-custodial. That means people who are developing protocols and validating transactions for those protocols and so on are exempt from registering as financial brokers. So it's nice to have that declaration from the US government that they don't see DeFi protocols as belonging to that class of businesses that need to separate securities and commodities and that kind of thing. So in a way, the Clarity Act continues to respect the kind of privilege decentralized protocols have already enjoyed up to this point in time. Long story short, the Clarity Act removes a little bit of the fear DeFi protocols had prior to the Clarity Act being proposed. Secondary market's going to be the same, deterministic trading systems are going to be the same, so on and so forth. The only kind of exchanges that are affected by the Clarity Act are going to be the purely custodial registered exchanges that will now need to separate the commodity-like tokens from the security-like tokens. So exchanges like Binance and Coinbase and so on, the Clarity Act for them is a much more significant issue, maybe in a bad way, because it means that there will be this ladder that tokens need to climb where they go from security status eventually up to commodity status. That's kind of the idea. And so it's reasonable to speculate that there'll be two versions of Binance. They will have to be separate entities. One, which deals with new tokens, which it will treat as securities. After those tokens get to a certain age, they suddenly become commodities and they will need to move to the other Binance, which deals solely in commodities. So it doesn't affect DeFi protocols at all. But for centralized exchanges, I imagine it's going to be a very tricky thing to navigate.